Thanks for joining us again for another, are we calling these episodes? I don't know what we're calling them. We'll call it an episode. Again, Josh Emke here from One Claim Solution. I've got my business partner, Jeremy Trosdahl, with you guys again. Wanted to discuss a few things this time around, specific to the industry. I know that a lot of you have read the state of the industry that had come out. We've discussed a few of these things and wanted to kind of pick Jeremy's brain on specific trends around cash flow, that what we saw in 2024 and maybe what can be done around those challenges. So
interestingly, we as at OCS have seen, and this is one of those things that we fight against forever, right? We're trying to get days to first payment down. We're trying to get days to close down. We're trying to continue to get cash flow as fast as possible for these contractors, right? We saw in 2024 a slowdown even in our KPIs to a point where we hadn't seen that from a year-to-year basis as bad as we saw it this year. So when that happens, obviously we first look internally and we say, like, what have we done? What have we changed? What broke? Or what do we need to fix? Because we're ever evolving, right? Or what do we need to change in order to get that down? We are continuing to do that. But I'm always eager to see these R&R reports or CNR reports, these state of the industry type reports, because I'm curious. Again, we've processed $500 million in claims, right? So, we have a pretty good visibility into what normalized situations look like. But in terms of the grand scheme of things and the property and casualty insurance world as a whole, I always just want to see what these are being reported and if we're feeling the same things that everyone's feeling across the country, right? And the reports came out and it says, man, a bigger emphasis than ever before is, man, it feels like my cash flow is slow. It feels like my days to payment continues to rise. We are taking forever to get paid, which is why I think OCS, frankly, had a lot of success in 2024, is because this idea around AR management has really been a strong emphasis because of what we're all trying to fight against in 2024, which is it's just taking a lot longer to get paid from these carriers than it typically has over the last 7 years prior, I guess, would be the visibility that we have. And so that's one of those things that everyone's, I think, trying to fix.
Yeah. And thinking through that, with, what's causing these delays, right? What happened in the industry to cause, these days to payment, this, not even just days to payment, but overall final amount to collect. What happened, and it's tough to look back and pinpoint that and blame it on one specific thing. It's easier to kind of look back and say, well, overall as a whole, there's been a lot more of like the catastrophic type of events with the hurricanes happening and these types of things that can absolutely affect the property and casualty world. And those types of things will ultimately have a trickle down effect, into our specific space with the restoration and, the day-to-day stuff that falls outside of those catastrophe type losses and events. But, anything else that you've seen or?
Yeah. So I think my mind goes to where your mind goes, is like, okay, what big event happened? Was there a big fire, right? The California fires we've seen. We've seen now multiple hurricanes, not only this year, but in years prior, right? We've been in business long enough that we've had multiple hurricanes. We've had the Texas freeze. Remember that year? Yeah. And so we've seen these catastrophic events happen, and they do slow payments down for a time. If I were to say, man, we saw 5 this year, then I would easily write this year off and say, okay, we just had a really, really wild year in terms of just environmental events, right?
Right.
Having said that, I think we had a hurricane or two, I know of, right? Had a hurricane or two that affected us for tornadoes, a time. Yeah. Some tornadoes, but it didn't seem like a wild year, especially wild year. And so I think that this problem goes far beyond that. I think that something systematically is changing at the carrier level. That's delaying payments being cut. And I don't know what that is at the carrier level, but there is obviously something systematically that has changed this year that has delayed payments, and it's not just catastrophic events.
Right. The other thing that we've seen is a noticeable uptick in the amount of denied claims coming from the carriers. That has exponentially risen over the last year and a half from what we saw the first 6 years, 7 years of doing what we were doing. And so that's an interesting change is this rise in flat out denied claims too. But I think that's all connected, right? Is to what's happening from the carrier's perspective. And it's easy to speculate. It's easy to look at, cases that are going on around the country, of companies or homeowners or whatever fighting back against some of these carriers that are using unlawful or, unethical practices and tactics to delay the payments, deny claims, do those types of things. But at the end of the day, this is the industry we're in, when we first got involved in the industry, Jeremy, it was, I think I had a lot more hostility towards insurance companies than I do now. They were, I think I kind of always viewed them as the enemy, right? They're the bad guys. We're the good guys in all of this. But as I've grown, as I've learned about the industry more and more, as I've read through different cases and understand things, insurance companies are they exist for a reason. They want to generate profits too, just like the rest of us. We're in business not because we enjoy it, but because we need to provide a living for our families. And I've come to have more respect and appreciation for the role that insurance companies do play in especially the American economy. None of what we have, we could have without insurance. I can't have my house. I can't have my car. It makes zero financial sense to own those things without insurance. If you're in an accident, if the house burns down, you lose it. It's gone. But with insurance, it's literally the great equalizer of this for really the American middle class. And the reason I'm going down this road is because, that change in mentality and the way that I view insurance companies and the role they're doing, it's easier to kind of maybe give them a little bit more leniency. I don't even want to say leniency, but understand why they do what they do. I'm not justifying, not saying it's right, but that's where OCS can come into play more on that type of a thing is we've often touted our ability to remove the emotion from the equation. We're not the ones that answered the phone call at 2 a.m. to go out and respond to that flood. And so we're not the ones sitting there going, I need to be paid on every single one of these line items, especially this one. At the end of the day, our goal is to reach certain benchmarks and KPIs for our clients, our customers. And so we're able to really remove that emotion from the equation. And we're able to recognize those trends that we've discussed on insurance companies, slowing down their payments or refusing to pay for certain line items. And we're able to help overcome those. But even in 2024, we talked about that downturn, right? Where it took us a little bit extra longer to collect the money, or, not just us, but the industry as a whole, as stated by the State of the Industry address. Those are the types of things that we're able to recognize those trends very quickly, and we're able to address those and adapt and shift, but being able to keep that emotion out of it helps see a little more clearly, I think. But any other thoughts on that type of stuff?
No, I think also just internally at some of these carrier levels, like they're trying to implement new processes as well. They're trying to implement AI. They're trying to implement changes. And I think with every change, there's a hiccup in terms of production. Mm-hmm. And so I imagine we're going to continue to fight this fight, to try to make sure that we get our clients paid as fast as possible, and we'll continue to do that. But I think we'll continue to have an uphill battle. I don't foresee that this is going to just have a turnaround in 2025.
Yeah. Yeah. It's just that constant chess game, right? They move, we move, they move, we move. Always has been that way. But yeah, it's interesting to see. Hard to predict why carriers are doing it other than, motivation for profits and, for their own financial health, which, I again bring up the value that I see that insurance companies have. And so it is important that, as we work with contractors, make sure that their documentation is correct, that it's accurate. All of that helps facilitate and streamline that whole AR process for them, the days to collect, the amount to collect. So there definitely are things that can be done from the contractor's level to counteract these trends that we're seeing. But it was an interesting year for that, no doubt. Jeremy, we kind of touched briefly on those trends of, that were identified in the state of the industry and the cash flow issues. Talking more specifically about OCS and how OCS can help contractors overcome those trends. How do you see that role that OCS kind of steps in to help overcome some of these more recent trends that we're seeing?
Yeah, I think that there's really two buckets that you can really take on to affect change to your cash flow. From a contractor's perspective or our perspective, you have to gain efficiencies. We've talked about that before. Gain efficiencies in AI, gain efficiencies in the predicted outcome of a claim. When you gain efficiencies, that allows you to touch more claims in a shorter period of time. Truly, the most effective way to improve your cash flow timing is to be on top of, I guess I would add a third bucket, but be on top of your claim and make sure when your claim was submitted that it's submitted with all of the pertinent documentation. So there's no back and forth needed from an adjuster to a contractor to say, hey, you didn't give me photos, or you didn't give me your moisture logs, or you didn't give me X, Y, Z, because every back and forth is just a delay in payment, right? And so I would say make sure that upon submission, you have your stuff in order. Make sure that you are continuously calling the adjuster, following up with the adjuster to get payment on your claim. And then third would be the AI efficiency gains, or just any efficiency gains that just allows your team or our team to touch more claims in a shorter period of time, because I think that that's really the key to cash flow.
Yeah. One of the things that I don't think we've ever really talked about, right? But it is a question that we get a lot, or maybe it's even, questions that contractors have and maybe might keep them from calling us. But when a contractor reaches out to OCS, what does that typically look like? What can a contractor expect to go through if a contractor reaches out to us and is like, hey, heard about you guys, seen what you guys are doing. Here's my business. Here's what I'm doing. How can you guys help us? What does that initial process look like?
Yeah. So, I think it's a multi-tiered process, but obviously we want to make sure we're a good fit. There's a fit for the contractor. There's a fit for us to make sure that we're all on the same page on expectations, KPIs, what we're all both trying to get out of the relationship. There are contractors that see our value in terms of speed of cash flow. Mm-hmm. There are some that see our value in terms of, I don't want to deal with it. I don't want to deal with the adjuster. I don't want to take the call. Some of them see our value in documentation management, expertise. And then some of them see our value in our data analytics and our portal and what they get to see in terms of their AR and what they get to see in terms of their jobs, because our software gives them visibility into things that no other software gives them visibility into in terms of their AR.
And that's what you mean by referring to portal.
That's correct. That's what I mean when I say portal. So those are all different value add services, that we provide, and each contractor comes in with a different need, right? Yeah. And so if they reach out, we're going to make sure that we're a good fit and they're a good fit, and we'll take a look at kind of their historical KPI performance, where we see some of their deficits are, and then what their team looks like currently, and then what our team would be doing. And really it's an outsourced model, right, of their back office. It says, hey, let us just be your back office and handle this for you.
Yeah. So I appreciate you touching on that. I just know that's a question that I get a lot is, well, what does that look like if I ever reach out to you guys? Is it some huge strenuous process? It's always scary for a contractor to consider, turning over that control of their accounts receivable. That's the lifeblood of their company. And so for them to turn that over to a third party, that's a scary concept a lot of times. And so what does OCS do to help kind of alleviate that fear with contractors of that turning over that lifeblood of their company to a third party?
Yeah, I would say, first and foremost, visibility into that lifeblood of their business is how you're going to overcome that,
100%.
right? It says, hey, you sent us X. Here it is. You can see it. You can see what stages it's in. You can see where it's gone. You can see when you're getting it in terms of a claim. And so the more visibility we can get contractors, the better, because that alleviates some of that pain of, I'm not just sending it into a dark hole and hoping that the money comes back.
Yep, absolutely. And I'm glad you touched on the visibility. I think that's been one of the biggest eye-opening things that I have seen and incurred, since being in this industry is the lack of visibility or transparency that contractors oftentimes have into their own AR. And the feedback that we often get from them after they're with us for even just a few months is, oh man, I've never had this type of visibility and clarification into my AR. I know where everything's at. And I think that's one of the benefits that I'm not sure that we really anticipated when we set out to start OCS, but it's definitely been something that has risen to the top as far as one of the key benefits that we're able to offer contractors is that visibility into their AR, and we talked about a little bit of the AI, and the predictability of that. Contractors being able to predict their revenue and when it's coming in, how much is potentially coming in, that helps drive all of their business decisions. And so having visibility and that type of access and clarity into that, I think is one of the big benefits of OCS, outside of just the obvious of we collect very well and we collect very fast. So interesting. So in kind of jumping, piggybacking on what we were talking about with, what contractors can expect if they reach out to us, and how scary it is for them to consider that and often make that leap of turning over their lifeblood over to a third party. The other thing you consider there is, OCS is not a new startup company. I mean, we've been here for 8 years now and have seen very consistent growth over those 8 years and have gained a very different type of view into the insurance billing process that really nobody else quite has, based off of dealing directly with the carriers, also the legal aspects of it and diving down into those roads. But so I would just throw that out there. But any other thoughts you have, Jeremy, on how OCS can help a contractor with their AR, kind of these problems identified with the state of the industry?
Yeah, ultimately, I think that in terms of performance and cost associated with that performance, OCS is best positioned in the cash flow management process than anybody in the industry. We've done it for 8 years. At this point, we have our systems pretty dialed. We are continuously evolving, but in comparison to back office staff or collectors or billers or whatever they call their team, we are going to be more efficient. We are going to be faster. We've just been able to develop that because that's our core business. Our core business is not doing restoration work and then having billers. This is our core business. This is all we do. This is what we spend our time developing and ensuring that we are the best in the industry to attack the cash flow problem. Ultimately, we believe we're not only better and faster, but we're going to just be an improvement to your bottom line, even because we have the systems in place to be able to do it more efficiently than anyone else.
Yeah, absolutely. So I guess I would wrap up by saying, hey, look, if you're a contractor that's heard of OCS and you've heard about us for a while, reach out. see what we have to offer, see if it's a good fit for your company. Like Jeremy alluded to before, OCS isn't a perfect fit for everybody. And we're pretty good at identifying which contractors we fit well with and which ones we don't. But reach out. Let's explore that together and hope to hear from you guys. Thanks for tuning in again. And if you want to reach out, www.oneclaimsolution.com. Reach out to us. Appreciate you tuning in.